Thanks for attending this webinar and to start trading with OneRoyal webinar. We have a quick disclaimer. The information provided in this webinar is for educational purposes. Please do not take them as financial advice. Do your own research before start trading or investing. Our topic today is how to trade Fibonacci retracement. So we have those points that we will cover today. What is Fibonacci sequence, Fibonacci retracement levels, what do Fibonacci retracement levels tell you, so how we can use the Fibonacci retracement, the downside of using Fibonacci, and finally we will go to show you how to draw Fibonacci levels, and we'll give you an example on MT4. So what is the Fibonacci sequence? Fibonacci was first discovered by Indian merchants and brought to the Western world from the mathematician called Fibonacci. And then what he did is he said that if we calculate or we add those numbers 0 and 1, we get 1, and then we will add 1 and 2, you will get 3. So every time we will add the consecutive numbers, you will get the next one. So 5 plus 8, 13, and then etc., etc. And then what he mentioned is after 3, if you divide, let's say 5 divided by 3, you will get 1.618. If you divide 8 divided by 5, you get the same number. 13 divided by 8, you will get approximately the same number, and etc., etc., etc. So this was considered as the golden ratio, the 61.8, the inverse of 1618. So if you divide 1 divided by 1618, you will get 61.8. So this is a golden ratio that it is common in Fibonacci retracement, or what we will use in technical analysis later. So remember 61.8, it is a golden ratio. Also you can find it a lot in nature, or even if you take the length of your top of your head until the tip of your toe and divided by the length of your whole body, you will get 61.8. So the top of your head, if you take the length from your top of the hand until the tip of your finger, and divided by the whole length of your body, you will get 61.8. If you try it for any person, you will get the same number, which is 61.8. So this is briefly what is Fibonacci sequence. What are Fibonacci retracement levels? So the level 61.8 plus other levels, we will use them in technical analysis to discover or find support and level. Okay, so the Fibonacci retracement tool, or this one that you see to the right, what you will see is you will see levels. This is the indicator. You can find it in MT4. Everything is calculated automatically, so you don't need to calculate anything. You just plot it and then you will get those levels. When used, probably the level displayed by the tool offer potential prices to buy and sell. Okay, so we will use this indicator to know where to buy. Maybe here, maybe here, maybe here. It depends on your strategy. Okay, so those levels will help us know where the market will retrace. Okay, so if we are in uptrend and we have a correction or retracement, whatever you would like to call it, then you will have an idea where most probably the market will retrace. Purpose is to analyze where a price correction could end. So similarly what I have said, we will know where most probably the correction will end. If we are in uptrend, we have a small correction, we will know where most probably this correction will end. This is how you will use it. Okay, by measuring the price trend before it that is being corrected. Fibonacci retracement levels often used to clarify support and support and resistance level. So those level where the market could retrace. So if we are in uptrend, we will use this Fibonacci retracement. So these are support levels in case we are in an uptrend. In case we are in a downtrend, we will identify resistance levels. So the market could retrace to here, and then drop, or here and drop. Next, what do Fibonacci levels tell you? So the market is moving higher and you think it will keep moving higher. So we will use the Fibonacci to know, as we said before, where a certain level of correction will end, and then it will continue in the same direction of the main trend. So if we have an uptrend and you would like to know where this small correction will end, we will use Fibonacci retracement until 61.8, let's say, the golden ratio that we have talked about, and then most probably the market will continue after this level. So if we know the market is in an uptrend and we have a small correction, from this level most probably it will continue its move to the upside. This is how it helps you in your trading journey. Okay, so what is 61.8? By the way, 61.8, I will repeat, it is 61.8%. This lens here, this is the 61.8% of this level here, which is the whole movement to the upside. This is an impulsive wave, we will consider it as 100%, the impulsive wave from the beginning until the top. The retracement here represent 61.8. So we will assume that if we have a correction, most probably it will correct around the 61.8% of this whole movement, and then it will continue in the same direction of the main trend. So what you can do, you can buy around this level here. You want to enter a trade to buy if we are in upward movement, for sure. If we're talking about a downtrend, then it will be a sell position. But you don't want to buy near a short-term peak, because when the price falls from the peak, your trade will be in a loss. So this concept of using Fibonacci indicator, it will help you to buy at a cheaper price. Okay, you know this expression in trading, buy low and sell high, and this indicator will help you to know where to buy at the lowest point. And the lowest point is the lowest of, or the end of the correction, which is here. So it's better to buy from this area using the Fibonacci retracement than buying it from this area here. Okay, because here you will make much more money if you have target here. Okay, buying it from here to here or buying it from here to here, this is much better, because you're buying it low. So it will give you the opportunity to buy at a cheaper price, which is what this point covers. You want to wait for a dip to buy at a cheaper price. The dip is better known as a retracement. This is called as a retracement. Some people call it as correction. Retracement, correction, whatever you would like, is the same. The market is retracing its move higher by moving lower. You can buy at an arbitrary retracement like a 50%, and the other common ones are 38.2 and 23.6. So instead of buying 61.8, some other trader use the 50% and some other use 38.2. This is all depends on your strategy. It's subjective, to be honest. So the most common one that you should rely on, I think, this is the 61.8, because most of the traders are using it or looking at this level, which is 61.8. So if everyone looking at this area, it is worth it to use it for your trading strategy. Now we'll talk about limitations of Fibonacci. What are the downside of using Fibonacci? Usage of this indicator is subjective. Why? Because there is no precise place to put or to plot this indicator. Some, let's say, use this low and this high. Some other use this low and this high. So this is subjective. Mostly because they can be drawn different prices between different prices, should only be used in trending markets. A very important thing whenever you plot this Fibonacci indicator is to use it in trending market. Do not use it in sideways market because it will not help you anything, and most probably the price will retrace 100%. So it doesn't make sense to use it. No concrete proof behind why Fibonacci levels work. Okay, but what I can tell you is that it is used by most of the traders. At the end, you don't need why this works. You need to know that it works in the market and most of the traders are using it. So it is worth it to have an idea about how to use it. There is no way in advance to know which of the Fibonacci levels price will bounce from. Okay, so what I mean in this point is that we have several levels. We have talked about 38.2, 50, 61, 78.6. The idea here of this point that we don't know at which level the market will retrace. It might retrace at this level, and then move to the upside, or 38.2 and move to the upside. If I need to give you an advice, use the 61.8, okay, because this is the golden ratio, and as I said, it is used by most of the traders. Now, how to draw the Fibonacci level. First, you should know the direction of the trend. So if you are in an uptrend, what you will do is you will find an impulsive wave. You will wait for an impulsive wave. As you remember, in a trending market, the price move in the following way: impulsive wave, correction, impulsive wave, correction. So we will use the indicator to know where this correction will end, and then we will buy at the bottom. So this is the main usage of Fibonacci retracement. So how to apply this? First, you should see the direction. If we are in an uptrend, what you will do is you will search for an impulsive wave. This is an impulsive wave. This is here another one. Let's say we are going to use this first one to know where this correction will end. So I will erase everything to make things clear and let you understand what I'm talking about. So if we have an impulsive wave, we knew that we are in an uptrend and we have an impulsive wave, and then we started to see a correction. This is a correction or retracement. And now we need to buy low. To know where this correction ends, we need to use Fibonacci level. First, if you are in uptrend, you will plot it from the low of this impulsive, and then you drag it all the way up until the high of this impulsive wave. Okay, and then those levels will appear. The most common one is 61.8. What you will do is you will wait until the market react around this area, which is 61.8%, and then most probably you will buy from this area here. Okay, so this is how you will use the 61.8. Okay, I will answer your question just give me some time at the end of the session. Okay. So as we said, we will use the retracement, the Fibonacci retracement, to know where this correction will end. The most common one is 61.8, and then from here we should expect the market to move to the upside. So this is how you will plot the Fibonacci retracement in an uptrend. In a downtrend, you will do the same, but you will use first the high, and then you will drag it to the downside. So if you have a downtrend impulse correction, you will plot first the retracement by plotting it from the high and then drag it all the way down until the low of the impulsive wave, and then you will see those levels appearing like this. Okay, so this is maybe 61.8. You expect that the market will drop from here and then you will sell. Let's move to the MT4 to show you some real examples. If I start with a downtrend, so let's say I will take here the Euro USD. As you can see, we have a downtrend. Lower highs, lower low. So impulse correction, impulse correction. We have here a deep correction. So this is a whole impulsive wave and a correction. What you will do is you will take, let's say you are around this current price here. You don't know what happened later. You know that you are in a downtrend. The market made a move to the downside, then started to plot few bars to the upside, and now you would like to know where to put your Fibonacci retracement. You would like to know where most probably this correction will end. So what I did in a downtrend, as you remember, first you will plot the Fibonacci at the high. Okay, sorry. And then drag it all the way down until the low of this impulsive wave, and then you will wait until this 61.8. And as you can see, it went little bit to the upside of the 61.8, but after it we have a huge move to the downside, an aggressive one. So you can sell around this level. My advice to you, do not use Fibonacci level alone. You can combine it with something that we already used, which is, in case here we are in a downtrend, you can use, let's say, a resistance. Okay, we have this point, this point. So this is a resistance level that was acting as a support. Now it is a resistance because it is broken. So we combined it with the resistance. So we have the 61.8 here level plus the resistance. So we have two confirmation which led the market to move to the downside. Let me find another example, but the upside. So here we have the market moving to the upside, okay, which obvious, higher highs here, higher lows, so the market is moving to the upside. Let's say you are around this level here. So we have a beginning of retracement. So you know now that we are in uptrend, we will face a correction. To know where most probably this correction will end, what we will do is we will use the Fibonacci retracement. First, you will plot it from the lower side of this impulsive wave all the way up until the high of this impulsive wave. What you can see here is that the market reacted mostly around the 61.8. It's not exactly at the 61.8, which is normal. Nothing is perfect. This is the market. But if you look at the 50%, we have a more accurate reaction. And then after it, the market moved to the upside. So you could buy either around 61.8 or at 50%, and then the market moved to the upside. So easy, like this is the easiest way to use Fibonacci retracement. And as well, you can, let's say, use a support level. Okay, this is a support level here, 1, 2, 3, 4 points. The market went below the support, which is considered as fake out, and then the market moved all the way up. So this is how you use Fibonacci. This is the main idea behind Fibonacci sequence. Hope it is clear. If you have any question, please let me know in the chat area. I can help you with your doubts. So what is your favorite Fibonacci level to trade on? Okay, I use mostly 61.8. I prefer 61.8 because, as I said during this webinar, it is used by most of the traders. So yeah, I use 61.8, but alone is not enough. Jasper, you can combine it with support and resistance as I showed you in the real life example at the end of this webinar, or maybe other indicator that you backtest, that you already backtested with. Okay, so thanks for attending again, and we'll see you next Tuesday for the weekly update. Have a lovely day and bye-bye.